The good old fixed deposits are not so good anymore. The reason is not just the falling and the steady decline in the rates of fixed deposits, but also because the current inflation rate is hurting the FD returns even more as of today. Now, let us look at the current inflation that you and I are paying. For retail inflation, the consumer price index, it is at 6.95%. The wholesale price index inflation is at a record level of 14.55%. Now, in effect, when you compare this with your FD returns, there's a vast difference right there. Look at an example of SBI FD or a fixed deposit in the State Bank of India for a 1-year tenure. Now, there is a return of 5% or an interest of 5% that you earn on this fixed deposit. But in case you fall in a tax slab of 20%, this interest comes down to 4%. And in case you fall in a 30% income tax slab, then it further falls down to 3.5%, which means at the end of the year, you only earn an interest of 3.5%, keeping in mind your tax slab. Now compare it with the inflation rate as well. Now, a 5% FD rate as against an inflation rate of 7%. So, in effect, the real rate of a return on your investments in your FDs is negative 2%. That actually means that your wealth is in fact getting eroded by investing in fixed deposits. Let's take an example right here. In case you invest 1 lakh rupees in SBI fixed deposit for 1-year tenure, at the end of 1 year, you will obviously expect a return of 1,05,000 rupees. So, 5,000 rupees interest is what you will expect. But compare it with the inflation rate, add to it this inflation, and then you will see your wealth getting eroded. Not just that 5,000 rupees, but an additional almost 2,000 rupees and more than that as well. So your initial capital, your initial investment of 1 lakh rupees is also further getting eroded by investing in fixed deposits as well. Let's move on and see what are the other factors that you need to remember here. Now, other saving options. It will be a better idea at this point in time to consider some better saving options which can help you beat the inflation rate. Look at an employee provident fund, which gives you a return of 8.1%. You can explore that. PPF gives you a return of 7.1%, so marginally higher than the current CPI inflation rate. Sukanya Samriddhi Yojana that you can invest in for your girl child gives you a better return of 7.6% as well. Other than that, you also have the senior citizen savings schemes as well. Now, this is applicable for people over 60 years of age, and then you can expect a 7.4% return, again marginally ahead than the inflation rate as well. NPS, which is the National Pension Scheme, definitely gives you 8 to 9% return when you compare it with the different schemes, be it corporate or government scheme right there under the NPS route. Now, hybrid funds, which will definitely give you inflation-beating returns of 9 to 12% as well. Remember, hybrid funds are those that invest in a mix of equity and debt as well. So, overall speaking, blindly investing in fixed deposits right now, thinking that your money is growing, is a bad idea. Look at the inflation rate and see how your inflation is getting. Your investment is getting eroded by just investing in that FD. You do need to explore more options, diversify your assets, and look for opportunities where you can actually beat inflation and therefore get handsome returns on your investment.
If you like the video, do like, comment, share, and subscribe.